What's up everyone, my name is Ale. Welcome back to my world of stocks and welcome back to my favorite series on the channel where we talk about all the stocks that I bought or sold last month, which was of course June 2022, and all the stocks that I'm thinking about buying or selling this month here in July. And of course right now the stock market is extremely volatile and really continues to fall and crash. For example, you have the S&P 500 that is currently down over 20% from its highs. That's technically considered a bear market. Then you also have the tech heavy NASDAQ down over 30% from its highs. A lot of people would consider that just a full on crash. But no matter how you define it, there are many stocks in the market right now that are full on crashing by giant amounts. And I'll show you some examples in today's video. But as a long-term investor, I do tend to actually like these sort of volatile times because it does allow me to lower my cost basis and buy stocks as they go down. Granted, I buy it in very small amounts because the market is trending downward, so I don't want to go too heavy, so I buy slowly as stocks fall in small amounts and then I hold them for the long term. So let's go ahead and talk about the stocks that I bought last month in June, and then we'll transition over to July as well. Okay, now before I talk about the purchases that I made in June, I just want to quickly note that I did actually sell one stock last month, which was the gaming company Take-Two Interactive, ticker symbol TTWO, who is behind popular games like Grand Theft Auto and NBA 2K. But this was actually just a technicality, I would say, because I was never really invested in Take-Two to begin with, at least not by choice. See, I was actually invested in the mobile gaming company Zynga, who got acquired by Take-Two for about a 65% premium through a combination of cash and stock. So I just took all of those profits and all of that stock and I really just cashed it all in, which was really nice to be honest, to be able to collect some huge profits at a time when the rest of the market has been crashing. So I just went ahead and used that opportunity. Anyway, moving on to buys, the largest purchase that I made last month was in Google, ticker symbol GOOGL, which I bought at the low $2,100 range. And the reason why is very simple. Here's a 10-year chart of Google, and you can see just how incredibly rare it is to be able to buy this stock on any kind of dip. And right now happens to be one of those super rare times, as it is currently down by close to 30% from its highs. And I'm sorry, but when you're talking about a company that grew their sales by over 40% last year to over $250 billion, and the stock is trading for a PEG ratio of below 1, despite owning some of the most popular platforms like Google Search, Maps, Gmail, Android, YouTube, and many more, I just think that the stock is a screaming buy on any dip, and especially at these levels. And yeah, I'll probably keep buying here in July as well, because I really think that Google right now is the best value in the entire market in terms of price versus what you get back in value. Anyway, carrying on here with the theme of buying massive companies that are safe long-term bets in my opinion, but that are being dragged down by the broader market, I also went ahead and added some more shares to my number one largest stock in my entire portfolio, which is Microsoft, ticker symbol MSFT, at right around $245 per share. Since then, the stock has bounced back up a bit to the nearly $260 mark, so I'll probably stop buying any more shares for now since it's already, my largest stock. But even here, it's still down more than a quarter of its value from its highs. So for someone that is not invested in it, I think it's still a pretty good opportunity, because you consider the dominance that they have in so many markets like business software with Office, operating systems with Windows, networking with LinkedIn, coding with GitHub, gaming with Xbox, and of course cloud computing, artificial intelligence, machine learning with Azure, not to mention the unbelievably gigantic financials. I mean, I really think that Microsoft is always really a buy if you're thinking long term, but especially on any rare dips like the one that they're going through right now. Besides that though, I did also buy a little more of a couple of my favorite speculative stocks that I was down on, and I wanted to use this opportunity to lower my cost basis on them. And one of those was Teladoc Health, ticker symbol TDOC, which I own for the future of healthcare, where I think that much of it will really just be done virtually. And Teladoc is the number one market leader of that. So I really like them for that reason. But because things have opened back up and people are visiting their doctors in person again, investors have really freaked out recently and they crashed the stock by an unbelievable almost 90% from its highs. I mean, I get it was hyped up, it was highly valued, but in my opinion, I think this is a really big overreaction, and I think that the stock will soar again in the future when people realize their potential again. So I went ahead and bought some more shares at the low $30 range. The other spec stock that I purchased too, though, was Palantir Technologies, ticker symbol PLTR, which is a really big kind of surveillance play of machine learning and data analytics, data management. Really, that's what they do, data management company. And they work for both governments, the US government especially, for things like defense. They also help giant corporations with things like supply chains and general business efficiency and many other things too. Unfortunately, though, Palantir is currently going through a slowdown in their growth, which I feel is only temporary, as they do have massive long-term potential in their respective markets, but it was enough of a slowdown to concern investors, and it really caused the stock to get absolutely destroyed, losing around 70% from its highs. I gotta say though, I am loving this crash because I'm buying shares of this stock that I honestly never thought I'd be able to get. So I went ahead and bought some more shares back in June at the single digit mark, which I think is a pretty good price if I'm thinking long term. And then lastly, I'll just quickly mention here that I did also buy a little more of the Chinese e-commerce giant Alibaba, ticker symbol BABA, at just barely below the $100 mark. And while the stock has bounced back up a little bit since then, it is still down by over 60% from its highs. And I just think that if I'm thinking long term, this will end up being a great investment at these levels. If you want to know a few reasons why I believe that, I'd recommend the last video that I just put up recently where I covered 5 reasons why I'm investing in Alibaba stock for the long term. Anyway, those were the stocks that I purchased last month, but what about this month here in July? Well, I definitely want to keep looking for some really good, solid, giant companies that don't normally experience too many dips, but right now could be a good buying opportunity because the broader market is dragging them down. And then I also want to do the same thing with dividends. When prices are falling, dividend yields go up. So I'm always looking for dividends in these sort of situations as well. So let me just quickly list off just a few more stocks that I are high up on my watch list that I'm thinking about buying here in July, and then we'll wrap up the video. Okay, so starting with the giant companies that I think are getting dragged down to a good value, well, I'm definitely going to keep buying more of Google. Like I said, I think they're just the best overall stock right now in the entire market in terms of value versus the price you pay. But I also want to buy a couple others. One of those is Amazon, ticker symbol AMZN, who also rarely crashes, but right now they're sitting near a 52-week low after recently losing close to half of their entire value. That's kind of mind-blowing to me because at these levels, you're essentially wiping away all of the gains that they made from the pandemic where everyone was shopping online for most of their needs. And it's like we're pretending that their business didn't even grow at all during that time, but in reality, they actually grew their sales by over $100 billion just in 2020 alone. $100 billion in a single year of just pure growth. And if you think that's crazy, they almost did it again in 2021. I mean, that's insane, guys. And you would think that after all of that growth that they would, finally decline in terms of growth this year, maybe correct a bit, especially with the economy likely being in a recession right now. But no, that's actually not the case at all. Amazon is actually expected to grow by another double-digit percentage both this year and the next. So it's really just crazy. I mean, I think if you look at this from a long-term standpoint, I have an opportunity here of picking up more of the leader in e-commerce and cloud computing, among other things. And on this current crash, it's going to be, I think, one of the smartest decisions that I can make. It's already my 3rd largest stock in my portfolio, and I really like it at these prices. Now, to be honest, I am feeling some similar vibes, but to a lesser degree with Disney. That's ticker symbol DIS. And I just think that they're going to eventually be the world leader in video streaming thanks to all of their iconic brands. And of course, there's other parts of their business too that I think can be long-term cash cows for them, like their theme parks and resorts, especially if we're able to handle pandemics better in the future and don't have to close them down for literally months at a time. And considering that the stock has already crashed by over half of its total value, now sitting at a 52-week low and not that far off from the 2020 lows during that market crash where everything was shut down, I think right now might be another good buying opportunity for them. I mean, just like Amazon, we're supposed to pretend like Disney hasn't seen really any growth over the past couple years, but we know that Disney Plus has exploded over that time, having now reached close to 100 million subscribers, a lot of which is probably coming at the expense of Netflix. And long term, I think they're going to have leadership in brands and IPs that will keep the money coming in. And of course, getting past the pandemic, you're going to have their theme parks and movie theaters and all that stuff opening back up. So I'm not exactly sure why the stock is trading so low. I think there's some good recovery potential with this one. And finally, I'll just quickly mention that I do also want to buy some dividends because of the rising yields. And one stock that I think continues to look really good at the moment is Verizon, ticker symbol VZ. And I know I've talked about this one a lot recently, but I mean, this is a stock that has fallen by close to 20% recently, and that's caused their dividend yield to climb to about 5%. I mean, that's very high and attractive, especially when you consider how safe it is because of the really low payout ratio of below 50% and almost 2 decades of consecutive growth, even through the '08 financial crisis and even through the 2020 market crash, because people are always going to, need internet and use their phones and things like that. And another reason why I think that the dividend is safe is because I think the business itself is safe when you consider how strong it is in terms of not only cash flow generation at around $40 billion of operating cash flow per year, but also in how strong their brand is thanks to the network quality that they've invested so heavily in. Not only are they ranked the highest by small businesses, but they've also received the Network Quality Award by J.D. Power for a record-breaking 28 times in a row over the competition, and that reliability has even gained them a 45% market share lead in public safety because governments and municipalities trust Verizon more than AT&T and T-Mobile for emergencies where the higher quality matters the most. And considering that the yield rarely ever reaches these levels here of more than like 5%, I just think that the more that the stock falls here and the higher that the yield gets, it's going to make for a pretty good value play, I think, over the long term. Anyway, that does it for the video, though. I'd love to hear what you guys have to say and what you guys think about these stocks. Do you like any of them? Are you invested in any of them? And what stocks are you guys buying? I'd love to hear your thoughts on that as well. And then I can make future videos on those stocks too. So make sure you make your voices heard down below in the comment section. Thank you so much for stopping by. Hit the like button if you did enjoy the video. It helps a lot. But I will catch you guys in the next video. Take care. Bye-bye.